Cool. So what's on agenda today? So before we start, quick introduction. If you're first time here, I'm Hussain. So that's why I built with Hussain. And you can check out the website, our link down below. Even Twitter is linked. And we have today on the show. I think your first episode, right? You haven't joined me before.
Yeah. First one is the same.
Yeah, welcome, Umair. So Umair is
Privilege.
co-founder at Frappe. He looks at like Frappe school, partnerships, a lot of stuff. He does a lot of blog writing as well. Recently, I've seen him write a lot of good blogs. So do check them out. He's also active in Twitter, by the way. And yeah, over to you, Mar.
Great, Hussein. Thanks for having me. I think you have done great stuff with Build with Hussein. I go to places and I really, hear people saying, yeah, build with that. What's the name of this guy? Hussein? So you have really, I think, built a brand for yourself, and because you have delivered, I think, good sessions. So I think you have really raised set the great bar for everyone in the Frappe team, and I'll try and live up to that. That's my goal today.
Really,
Uh,
man.
we'll be talking about I think very fundamentals of accounting,
Mm-hmm.
the elephants in the room, what really scares people away, those who are not accountant. So those who are accountant, once you have absorbed the very basic things, the conventions, then you're set for the lifetime. You don't have to.
Mm-hmm.
And it's
Mm-hmm.
only if you have an HKC you have to worry about. But
Mm-hmm.
those who have given multiple attempts to understanding accounting
Mm-hmm.
and then gave up, thinking that no, debit and credit is not our cup of tea. What is asset and liability, income and expense. And I maybe you said like not really a hardcore accountant, so maybe we'll try and doing some experiments with him and with the audience also if possible. So
Sure, sure.
I'll try and keep it very basic. Those who have attended trial session might feel deja vu shock. Uh, but
I haven't, so
yes,
that lucky me. I just
good.
watched
So I
one of
think
your video very long back. I think when I joined Frappe, I watched one of your videos. You were teaching Hasnan at that time, so I recall. That was a recorded session.
okay. Yes, so okay, you might have basically got some clips, but we'll try and start
I
with very basic.
don't recall
So,
most of it,
uh,
so yeah, cool, cool.
good, that's good. So we can
Yeah, yeah.
have you as a yardstick to understand. If Hussein understood, then hopefully
Everybody
everyone
understands.
understood.
Yeah,
So let me
yeah,
know when we are ready.
yeah. Well, once you can share your screen.
Okay,
Mm,
so I'll share my entire screen without worrying much. Let me start with the presentation right away. Okay. So
cool.
accounting is very important,
Mm-hmm.
especially when we talk about doing an accounting in ERPNext,
Mm-hmm.
very optional stuff.
Mm-hmm.
It's very important you understand the basic because it's not only for the accountant. Understanding accounting matters. Even if you are a person into stock department, to manufacturing department, into HR department, the
Mm-hmm.
work you do in your day-to-day work has
Mm-hmm.
impact on the accounting. So eventually everything boils down to accounting, and hence it's very important that you
Mm-hmm.
don't run away from it, face it, and try to understand the fundamentals.
Mm-hmm.
So this was also me in my own college days. Financial accounting. Somehow I would mug it up, do some practice, and by heart sums, and pass with just pass clear the exam. But even I till until I joined Frappe and did ERPNext accounting on ERPNext very practically. We used to have this session internally also.
Mm-hmm.
I recollect in 2007, 8, 9, 10. We used to, Rishabh himself used to take very regular sessions. Then Nabin started taking, then I started taking.
Mm-hmm.
So even in Frappe, we have given lots of important to understanding of accounting,
Mm-hmm.
from very basics. Picking one laminate shop, one tea stall, wherein we used to go to a tea stall for our tea break, and we would consider them as an example, and how would they do accounting?
Mm-hmm.
So very very memorable days. So, but this is the thing in these students, like if you're not an accountant, but as a part of curriculum you have to do accounting. Somehow you'll just get, but don't really understand the fundamentals, the basics.
Mm-hmm.
But the history of accounting, when you talk about history of accounting, it's not very recent. It's actually very, very, very ancient. You know,
Mm-hmm.
it goes back to and the what how accounting came into being. So I actually just went through a couple of historic videos and for, forward to actually give credits to mm, the video I'm actually got this slides from. It's on YouTube, but I'll share the link in the interest of giving them credits. So accounting actually comes from the word count. It's eventually counting. It's eventually
Mm-hmm.
the very very fundamental basics of plus minus multiply division. But where to put what is basically where people get confused and is what accounting is all about, and that's what actually we'll try.
Mm-hmm.
So and even in the very very I mean maybe it's just like there were times yeah. So this slide I think I'm sorry I missed it. So in the region of Mesopotamia, and this is actually 1,000 year ago. You
Mm-hmm.
know, very, very ancient when in the humanity was just moving away from, say, along with hunting, we were also basically doing or learn doing agriculture.
Mm-hmm.
In this region of the world, Mesopotamia, modern day Syria, Ethiopia, Egypt, you have Nile River here and stuff like that. So in this region, actually, I think farming as a concept started, and because there was farming happening, there was lots of produce, there was lots of buyers and takers, and stock had to be maintained. What is available, what is not available, and that's
Mm-hmm.
how need is the mother of all inventions, like we say. The
Mm-hmm.
accounting also evolved with the need, wherein we had crops and its yield to be managed and eventually accounted. And in the ancient days also, the relationship between the rulers and everything, while there was lots of flow of know-how. So, in one of the historical account, actually, I read this very interesting thing that even Mughal Empire and Ottoman Empire, and different acting empires at that point of time had a relationship, and along with know-how of, let's say, warfares, machinery, there was also exchange of accounting practices, as to, let's say, Mughal Empire is basically helping them how accounting is done, let's say, in Indian subcontinent, and Ottoman Empire would basically say this is how you can do warfare better. So accounting practice was also a kind of exchange as a gesture between the rulers long back.
Mm-hmm.
And then comes with time, of
So
course,
there is
there
like
was
something in the chat. So Iqbal says, "Can you please speak a little bit louder and a bit slower?" So that's the
sure,
feedback.
sure,
Yeah. Mm-hmm.
louder and slower.
Yeah, I think yeah,
Okay,
this will fix it.
cool. Coming to 1949, where there was,
Mm-hmm.
I think, rise in the merchant organized businesses were getting organized and whatnot. And this is actually the area of Italy, right?
Mm-hmm.
Wherein there was, I think, some thought of basically giving loans and helping business evolve, trade evolve. And at
Mm-hmm.
that point of time, this guy, Luca Pacioli, from Venice, actually wrote a book. Uh, and in that book, there was a decent amount of focus given on the accounting practices. And
Mm-hmm.
the double entry accounting system, which we say goes as back as 1949, which was actually mentioned by a book by Luca Pacioli. So things kept
1494.
evolving.
Mm-hmm.
Yeah,
Mm-hmm.
yeah. Then industrial revolution happened. Of course, there was machineries. The mass production started happening. In fact, ironically, that the things like machinery would get accounted into uh, asset class. The people working on the field and everything would, very, kind of cruel maybe, would simply get accounted in the expense class. and stuff
Mm-hmm.
like that. But I think yeah, that was the time wherein there lots of industrialization happening. Maybe it's a time of Marxism and whatnot. And now, when we come to the very, very modern era, not as modern also, but maybe 1950s and 60s. But what I've heard internally also is basically one of the first software which was made was also an accounting software. Because this was actually very, very established need, and very, very generic need. No matter
Mm-hmm.
where you are, what you do,
Yeah,
but
yeah,
you had to
shops,
basically
everywhere accounting is there. Yeah.
governments, yeah, you had to
Mm-hmm.
basically manage your books of account to know what is
Mm-hmm.
happening, where exactly you are
Mm-hmm.
as an organization, in what state you are, profitable, not profitable, the burning money. You feel like you are making money, but eventually you end up realizing no, you are burning. So because there's actually so many things happening in parallel, and you can't really make sense of it. So
Mm-hmm.
maybe you're getting actually good amount of income from one side, but the small expense from many other sides culminates, and eventually you learn that okay, no, you're not actually making the amount of profit you think you are making. That picture is something else. That will only happen. That realization will only come only if you capture the those small expenses also that
Mm-hmm.
actually assimilate into something significant.
Mm-hmm.
So why accounting in present days to know financial health of your organization, just like we mentioned, and in present days it's not really an option. If you're doing a business, you're running a company, you have to manage your books of account.
Mm-hmm.
It's a statutory requirement, so you can't run away from it. As I said, in a company, there are lots of things happening. You're selling, you're purchasing. There are tons of indirect expenses happening, which you don't realize in small amount, but in large volumes. To keep track of overall picture, you have to basically do. And yeah, eventually, again, as a part of financial audit requirement, because there are external auditors who come to your organizations and audit your books of account, you again can't run away from it. So you have to
Mm-hmm.
basically maintain your financial statements. Again,
Mm-hmm.
now we are actually going to start talking about the financial terms like balance sheet and profit and loss statement and whatnot.
Mm-hmm.
So just hang it there. I'll try and basically convey it in a very, very uh, basic language as much as possible.
Mm-hmm.
So, for a company, let's say, what's the organization we are talking about here? Zenith,
Zenith
right?
Craft. Yeah, Zenith Craft
Zenith Craft.
Furnitures.
Yeah, Zenith Craft. So let's say Zenith Craft is the company we are talking about here.
Mm-hmm.
As a company, any company, for example, Frappe Technologies or Zenith Craft or whichever company you belong to,
Mm-hmm.
they have to basically, as a business, maintain two statements, two financial statements, and this
Mm-hmm.
is asked by the government also. Every quarter we have auditor coming into Frappe and auditing our books of account. Every year we have to basically file the returns and
Texas.
yeah, for taxes for the overall performance of the business.
Mm-hmm.
And these two, what is the difference between these two sheets? Balance sheet has two sides to it. One side is asset, like I mentioned, machinery, your bank balance, your cash balance, and
Mm-hmm.
stuff like that. And then you have liability on the other side. So just like asset is something you own, liability is something you are liable to pay, right? So
Mm-hmm.
here you have salaries payable, you have payment payable to the suppliers, you have equity account because eventually the Zenith Craft we are talking about is
Mm-hmm.
liable to pay returns to the investors.
Mm-hmm.
So that's why whoever invested into Zenith Craft would also be accounted as a liability for Zenith Craft because when we talk about this financial statement, we are talking about Zenith Craft as an entity. It's you can imagine it's a separate entity, and the investors, the employees, the customer, the supplier, the bank, and everything is basically a separate entity. Zenith
Mm-hmm.
Craft deals with, you know. So
Mm-hmm.
for Zenith Craft, even investors become sort of a liability,
Okay.
not sort of, but actual liability. And then you have suppliers who basically supply you goods, but you have not paid them. You have
Okay.
banks, loans, and everything. You have taken loan from the company, a bank, but you have not. you're yet to pay them. So
Repaid
again,
it.
it becomes a
Hmm.
liability. So just I hope like just like we can easily categorize asset that our bank account, the money in our pocket, the money in our bank account, the cash in our pocket, uh,
Hmm.
the car we own, the house we own is our asset, right? So for the
Hmm.
company, it's the property, it's the patents, the copyrights, and the stock for that matter. Whatever, if Zenith Craft has say 1,000 shares in their stock, all of that will account to that asset of that asset of Zenith Craft.
Okay.
Uh, right? Very, very simple to understand, right? Hussein,
Hmm.
maybe you can ask things if you don't understand, but
Yeah, yeah,
since
sure.
I have you as an audience, I can direct. And basically, and what happens with balance sheet is basically asset and liability. This keeps going on, irrespective of which month you are sitting in or which year you are sitting in. If I bought a property 10 years ago, and if I am here, that property will keep reflecting here, you know. Or if
Hmm.
I bought a stock again like 10 years ago, but if I have not sold it, it's still in my balance, it will keep reflecting. So what happens is basically balance sheet, the values in the balance sheet gets carried forward in the next financial year also. It's
Okay.
not like in the year 2023 we had say 5 lakh in our bank account. But as we go into 24, everything will become zero. No, it will get carried forward, right?
Hmm.
So
Yeah,
the
asset
another
will remain. Yeah,
asset will
exactly.
remain, liability will remain. Whatever liability, whatever you're liable to pay will remain in the next
Hmm.
financial year also. So the balance sheet is basically across the year. Uh,
Hmm.
and it gets carried forward into multiple years. It will there will be adjustment. There will be up and down. There will be let's say if you have appreciation could be there. For example, you are in Mumbai, and in Mumbai the property is like insane. You know, appreciation
Hmm.
is so. If there's a hike in property rates, you can mention appreciation, so value can go up. At the same time, if you're using machinery and say you bought a new machinery compared to you have a 3-year-old machinery, of course the value cannot be same even if it is the same machinery because you have used another machine for 3 years, so its value will go down. So there will be adjustment here and there,
Mhm.
but yeah, overall it will get carried forward till it becomes zero or anything like that.
Hmm. Makes sense. So this is like perpetual, okay. From the start of the time to till now, what's the current state, right? Yeah.
Yeah,
Not just a
and then
particular financial year. Yeah, makes sense.
exactly, exactly. There is the impact of financial year. At the end of the financial, asset and liability has to tally, but that's just the convention. We have to just remember at this point of time how it tally, why it tallies, that we'll see in future,
Hmm.
right? And then
Hmm.
profit and loss is basically very, very business oriented. For example, let's say Hussein is a business owner. Eventually, he wants to know that in this financial year 2023, how did we perform as a business?
Hmm.
I don't care how did we perform in 2022 or 2021. We had glorious days, glorious years. In 2019, 2020, we had bad year because of COVID. Then we had
Hmm.
good years. I don't care about that. I just want to know how much I performed in the current financial year. For that, what Hussein would do as a business owner is basically look at the profit and loss statement as to in this financial year, how much was my income, how much was my expense. And based on that, then you get a profit. So whatever earning you make, you mention it here. There are two types of earning. This is direct earning. For example, if you are selling furniture, whatever money we make by selling furniture would be mentioned into the direct income. And then there
Hmm.
are indirect incomes also. For example, as an individual, we get bank interest. We don't keep our money in our bank account or in our saving account for that matter, so that we can earn lots of interest.
Hmm.
Those who want to do it would probably have FDA and whatnot. But it's an indirect income sort of, that
Hmm.
okay, we didn't have the intention of making money from our bank balance, but eventually we made some money because that's the process of a bank.
Exactly.
Same way we had some scrap. For us, it was a scrap, but turns out that okay, when we sell it in scrap, we get some money. So that's a sort of indirect income. So
Hmm.
there's a direct income, the income which we earn by selling furniture. Indirect income, it could be bank interest, could be income from your by selling scrap and all. And similarly, then you have expense also. If you are running in say furniture shop, and you are also manufacturing, then of course you'll have to buy wood, you'll have to buy glue, you'll have to buy nails, you'll have to buy mica, different sort of raw material. You'll have to have
Mm.
a factory rent, you'll have to pay electricity bill, you'll have to pay water bill, you'll have to pay the factory rent, office rent, and whatnot. All different kind of expenses, right? From
Even salary, right?
uh, even salary, yeah, would be accounted on the expense side, right? So there are again two type of, just like you have two type of income, you have two type of expense also. One is direct expense. Direct expense, cost of goods sold is actually like the raw material cost. And then you
Mm.
have indirect expense, which is like telephone expense, admin expense, travel expense, water bill, electricity bill.
One thing. Cost of goods sold, right?
Yeah, yeah.
Uh,
So
which
this
sell
is
we
this
get
is
money?
actually very accounting term. Cost of goods sold means if we basically made 10 shares,
Hmm.
which we sold to the customer, so
Hmm.
that 10 sales actually were goods, right? What was the cost of making those 10
Okay,
shares?
so this is not like the cost at which you sold them, but actually what
Yeah,
was your investment in making those chairs?
yeah,
Kind of,
yeah,
yeah.
exactly. So
Hmm.
cost of goods sold, so
Cost of
you
goods
can simply
sold.
call it cost of
Cox.
raw material, but along with raw material, there are like other expenses also which goes into making chair.
Hmm.
So that also get accounting, and eventually you have cost of goods sold. Yes.
Okay.
So yeah, this is it. So I should have shown this earlier, but where
Hmm.
and if we talk about the elephant in the room, again this is the categorization. If you do multiple times, you can memorize it. But the
Hmm.
elephant in the room is not this. What really scares people is basically this asset debit, liability credit, income credit, expense
Hmm.
debit. And if I just say,
Hmm.
okay, now there is a time to pay salary,
Hmm.
so which will be accounts and what will get debit and what will get credit,
Hmm.
and we are completely blank, you know.
Hmm.
Okay, now this is the thing which we are really scared of,
Hmm.
to identify two accounts, to identify which account is getting debited, which account is getting credited. Because based on the use case and based on the scenario, you can have one account sometime debiting, one account sometime crediting also. And
Hmm.
okay, there are golden rules, standard rules based on the type of accounts we have. How to first categorize account and whatnot. I mean, of course, there are lots of in our school days also we used to have some conventions. Okay, if you have to understand this, just remember this song, just apply it, sort of,
Hmm.
so that you won't
This is where I am
you
also
can
very
easily,
confused in
yeah,
what when to
you can.
credit, when to debit, which side, what.
Uh, Great, great. So now I think the state is precious at this point of time. So let's hope we are able to think nail it. So
Hmm.
we have to basically break it down into steps. Okay,
Hmm.
we don't if we directly jump to a question as to if you're paying salary, then what will happen? Of
Hmm.
course, you'll be blank, right? All you have to understand is basically what are the accounting conventions, and this
Hmm.
has evolved over the decade. We talked
Hmm.
about years of accounting. So it didn't happen on day one. Whatever system which we'll be understanding today or in the future sessions, it has evolved over multiple years, and it works. No matter it makes sense to you or it doesn't make sense. So now what I'm going to say is basically might not make sense to you, uh, but eventually it will make sense. So the logic behind mm, asset, why is the base definition is debit, why liability is credit, income credit, expense debit. There's no logic behind it, and it's as simple as that. If you want
No
to
logic.
learn accounting, if you want to learn accounting, the first thing you have to do is basically just mug up this as it is.
Yeah,
Okay.
yeah. So
That,
in the chat, Azhar posted a acronym. So AEDLIC. So
yeah. So
asset expense
exactly.
debit.
Whatever that works for you. I mean, I think I have memorized this matrix in my mind. When I
Okay.
talk about what is asset, what is what. So I
Hmm.
see that asset and diagonally opposite is expense. Both are
Hmm.
debit, and then you have liability and diagonally opposite is income. Both are credit. For me, that works. For
Okay.
you or for other, like he mentioned, asset
Hmm.
A for asset, E for expense, and both are debit. So AED. AED is expense,
AED.
liability, income, credit, LIC for the
He
Indian
says
people.
that's yours. Okay.
Yeah, pretty simple to sort of memorize. AED, LIC. So the base is
AED
debit.
LIC.
It doesn't mean that debit asset always debits and it never credits. No, it's not like that. But just understand that for the asset, base is debit, liability for liability, base is credit.
Mm-hmm.
And on the for the profit and loss side, income is credit, profit and loss, and the other side expense is debit.
Mm-hmm.
And this whole thing put together gives you chart of accounts. Chart of accounts
Okay.
in ERPNext. So or if I just go back to this thing, if you look at this complete thing,
Mm-hmm.
groups, main groups, and subgroups, putting all of this thing together, what we get is basically called chart of account in ERPNext.
Yeah.
Okay, again here is the same thing. I just fill the blank. Asset debit, expense debit, liability credit, income credit.
Credit.
Right? And then you have subcategory. In the asset, you have two types of asset, fixed asset and current asset. Fixed asset means machine, intellectual property, building. Of course,
Mm-hmm.
that remains with you for multiple years, you know.
Mm-hmm.
And current asset is basically something you can easily liquidate into 1 year. Bank account, you can easily withdraw and convert it into cash. Cash is
Mm-hmm.
anyways cash liquid. Stock you can anytime sell and convert into cash. And
Mm-hmm.
receivable is something you are actually expecting from the customers to be received within 1 year.
Within 1 year. Okay.
Within next 1 year is also receivable because no one gives in even if you are giving credit to the customer, it would be max for 15 days, 30 days,
So I
60 days,
just
90
just
days,
a
not more than
doubt
90
here.
days.
Just
Yeah.
a doubt here. So we do this 3-year deals, right? Enterprise deals,
Hmm.
and like the customer pays us for 1 year, and then uh, about the rest of the 25 or
Good
50
question.
whatever percent, is that
Yes, yes.
receivable or not? Because it
No,
doesn't span
no,
1 year.
no. So, for example, let's say we have a customer and we have a deal with them for 5 years for
Mm-hmm.
500,000. Every year they have to pay us $100,000.
Okay.
We'll be talking in 100,000 because of the audience we have from outside India.
Mm-hmm.
So what happens? That deal is basically a contract for fixing the price. Okay.
Mm-hmm.
Generally, for that longer deal, you have a contract, and that contract means is actually if you continue to subscribe with us for next 5 years, we will give you this rate. If you
Okay.
don't pay us next year on time, then this same rate of 100,000 will not be applicable. Then you will have to
Okay.
basically pay or renew your contract at whatever rate that will be prevailing at that point of
Okay.
So if you get into a contract of 500,000 for 5 years, it doesn't really happen that you will basically right away go and make an invoice for $500,000. You will only make an invoice for the current year of $100,000. And then
Okay.
you have a separate document wherein you just track, okay, that we have this rate contract.
Mm-hmm.
And some people also call it blanket purchase order, blanket sales order, or rate contract and whatnot.
Mm-hmm.
Is the contract between two of us that for next 5 years this will be the rate, no matter what's the rate in the market.
Okay. Makes sense. So it's
Okay.
contract, not like receivable.
Yeah, receivable will be like in next year. In next year, without asking anything,
Mm-hmm.
I'm obligated to make an invoice of $100,000 and directly send it to you because we
Okay.
already have a contract. I
Mm-hmm.
don't need to ask for your permission. And if you
Okay.
don't pay, then it actually depends on what happens when you don't pay. But generally, what happens is basically then you also have some exit clause, and you eventually decide that no matter how you settle that point of time, but in future you're not going to get that same rate of 100,000,
Okay.
and every year invoice is separate.
Mm-hmm.
So
Makes sense.
coming back to debit and credit, what we have understood is basically asset is debit, liability is credit, income is credit, expense is debit. Okay, A
ADLAC.
E D L I C,
LIC.
right? Whatever that works for you, but the base
Mm-hmm.
type is debit. Now, what we have to do is basically when I tell you that okay, we have to basically let's say withdraw money from our bank account and pay electricity bill, for example, right? So we have to first understand what are the types of, or what are the two expense account involved and what is happening.
Mm-hmm.
If let's say my bank account is asset, right? Is on
Mm-hmm.
the asset side, and the type is debit. But if I'm withdrawing, then what is happening? It's decreasing, right? My bank account balance will decrease.
Balance will decrease, yeah.
So if there is a decrease happening in a debit account, then the ulta logic will apply, logic will apply. You'll have to credit, right? But if let's say if I'm making an income and I'm getting money into my bank account, so if there is increase happening in the asset account and increase
Mm-hmm.
happening in a debit account, then you debit.
Okay.
Or I simply say that, oh, you can also do, let's say, like plus is plus, plus minus is minus, right?
Okay.
So if debit happens into a debit account, then the balance increases. If
Mm-hmm.
debit, if credit happens into a debit account, then balance decreases. And same way, you
Okay.
have a liability. You already had a liability of, let's say 50,000, and you got more credit from the market,
Mm-hmm.
and you got more raw materials from the market on credit.
Mm-hmm.
So you're
Mm-hmm.
getting more credit, right?
Mm-hmm.
So if you're getting more credit, it will increase. Your credit is increasing. Earlier it was 50,000, now it is 70,000,
Oh,
right?
now it makes sense. So more debit, it increases. More credit, it increases. Okay,
Yeah,
makes sense.
yeah. But now if you are, let's say, making payment to the supplier, you had 50,000 in credit, right?
Okay,
But now when you are making payment to the supplier, it will have a debit impact because whatever liability you had
it
earlier of
decreased.
50,000, it is decreasing, and that's
Mm-hmm.
why you will do the debit end,
Mm-hmm.
right? Same way, income is based on credit. If you are making sale, it will increase. If you
Mm-hmm.
are not making sale or you're returning whatever, let's say there was some sale made, we generally
Mm-hmm.
buy something, then we go back and we say that no, no, we don't want
Mm-hmm.
it. Please return my thing. In that case, it
Mm-hmm.
debits because it's a basis credit. Now you want to decrease it, right? You want to decrease your income, so you have to debit.
Mm-hmm. Refund. Hmm.
Right? And same way, then in the expense basis debit,
Hmm.
you go to petrol pump and then you go get your fuel refueling done. So
Mm-hmm.
if the fuel price is 1,000, so your
Hmm.
expense account will debit by 1,000 because you
Debit
want
by
to add
1,000.
more expense, right?
Okay, got it.
And stuff
I
like
think for the first time I got it in 3 years.
that. I
Maybe I
hope.
was not interested at that time, but now I'm very interested. But yeah, one more thing, like there is a doubt in bank. So when you receive this message in your mobile, right? 30,000
Yeah.
credited to your account. Oh, it just, I don't know, it's reverse or something.
Yeah, yeah. So I mean, that's in the relative sense, maybe. The bank
Because
tends
when
to,
I credit,
for them,
right?
maybe it is credit. For you, it is debit.
Ah, for them it is credit because, okay, they have to pay me 30,000 more.
Maybe,
Okay.
yeah.
Their
But for
liability
yeah,
increases. Okay.
yeah. In your books of account, it will be debit. But
Okay.
in the Zenith Crafts books of account, it will be debit because
Debit. So
bank
asset
account
will
is asset.
increase.
Bank
Mm-hmm.
account is asset. It's on the asset
Mm-hmm.
side. The base is debit. If you are getting
Mm-hmm.
money, which is increasing your balance, it will debit.
Mm-hmm. Mm-hmm. So
If
what
you
about
are
loan account?
so loan can be of two types. If we look at this sheet, yeah, this sheet. So there are loan on the asset side also, and there are loans on the liability side also. If you
Mm-hmm.
are giving loan to
Mm-hmm.
your employees, which you expect being paid in within one financial year, then it will have a debit, right? Loan given
Mm-hmm.
and loan taken from bank. What will it be? You tell me.
Loan given will be like it's receivable, right?
Yeah, loan given is received. It's type of receivable.
And the loan taken is liability, so we have to pay them.
You have to pay. So base will be credit. If you take more loan,
Liability.
if you
Mm-hmm.
take more loan, what will happen?
Take more loan, that is basically increasing the credit. So credit.
Yeah, and if you pay back loan, what will happen?
So that will decrease the loan, that means debit.
Debit. Understood?
Okay. Got it, got it.
Simple, same way.
Okay.
If you give a loan to an employee,
Mm-hmm.
which they say I'll pay back in 6 months, what will
That
you
is
do?
receivable. That is an asset.
Asset.
So yeah, asset side.
Hmm.
Asset is debit.
Hmm.
So
So
when
when
you
you
give
give a
loan, it
loan,
will be more debit.
okay, and when employee pays you back, what will it be?
That will be credit.
Okay. Similarly, let's say we get into a business
Hmm.
and we have to basically rent a shop,
Okay.
okay, and we have to basically give a deposit.
We
Okay.
are renting a
So we
shop.
are
We have to
giving,
give a
yeah,
deposit.
and we have to give a deposit which we can actually then get it back. If we say
Hmm.
after 4 months, 5 months, that okay, no, we don't need your shop, we want our deposit back, so we can get it, we can liquidate.
Hmm.
So what will that be? Anyone in the
Mm.
audience also can give it an attempt along with Hussain.
Audience. Yeah.
Yeah,
Audience,
first
please.
categories, first categories. No, don't think about
Hmm.
debit or credit, just first categories.
Category. So the shop itself is an asset. No. If we are renting it, then that's not our asset, right? Or is it?
Or no, so our asset is only uh,
The
our
deposit, the security
deposit.
deposit.
Yeah, yeah, deposit.
Okay. So that's an asset basically because
Mm-hmm.
uh, we are we will get it back. So it's a receivable.
Mm-hmm.
So it should
Okay.
be um asset is debit. So it will be debit, right?
Mm-hmm.
Is it
Okay.
correct or
Yeah, yeah. Yeah. Good.
other says liability? I don't know.
Okay. So when you are actually getting or paying, sorry, I just tried accessing it in the phone, but I think I'll simply
Yeah, yeah,
disconnect
just
this.
pause it. Pause it and keep the chat open so it will work.
Okay. So when you basically, firstly, there will be an account called say rent deposit,
Mm-hmm.
uh, and it will sit on the asset side because deposit by very nature, uh, the owner is saying that you can actually get it back
Mm-hmm.
whenever you want. You have to just give me prior notice.
Mm-hmm.
So whatever deposit which will be giving 20,000, 30,000, 40,000, whatever will be actually our asset, a current
Mm-hmm.
asset. It will be our current asset. It won't be money in our hands, but it will be money we can get back if required. You know. So when we give deposit, our asset is actually increasing. It will go from our bank account only. So my bank account could credit from our bank account. I'm withdrawing and I'm actually giving to the shop owner. So the balance in the asset side will increase.
Mm-hmm.
And when I get it back, whatever I'll simply basically reduce my shop rent. I'll credit it and I'll add it back into my cash account. So then my
Okay.
cash account or bank account will debit. So we'll make a couple of entries, but this was just for an example. At
Mm-hmm.
this point of time, I'll just maybe I'll just leave at the screen and request 5 minutes from you guys, and I'll be
Mm-hmm.
back. So
Okay,
now give me
let's
5 minutes.
take a 5 minute break.
Okay.
Sure. In the meantime, I will discuss stuff with the
Okay. Cool.
audience.
Cool. Cool. Thanks.
Cool, cool. I will
I'll be back.
just turn off. Yeah, yeah, sure. I will turn off your uh, video for now.
Sure.
Okay, so just let me know once you're back and we can start. Okay, the audience. So how many people are there? So let's. Okay, 17 people are watching. So what is up? Anything special going on? So by the way, this is the 48th stream of this year. 48 live streams. I can't believe it. And we still have two streams remaining in this year. So the 49th will be on Wednesday with Dharmesh, episode 3 of Let's Learn ERPNext. And the 50th stream will be on 30th of December. That will be, uh, what do you say? Da, 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 30th of December. Yeah, the SQL Essentials, the last of the Essential series. So yeah, thank you everyone. And I think early 2024 will hit 2000 subscribers, so that's good too. But yeah, I'm still trying to improve the quality of the stream. So on 1st January we have a special episode with Suraj, we are going to live launch Frappe Builder with a live demo deployment and everything. So do join in. We are going to actually build a web page from scratch using Builder and also make it live on Marketplace. That's the agenda. But yeah, so two streams more in this year and early next year, 1st of Jan, we'll have another stream. Cool. Okay, so episode 1 of Let's Learn ERP Next has already reached 1100, what do you say? 1100 views. That's awesome. The second episode has nearly 409. So, but yeah, I think people are liking it. So we'll continue. But yeah, anything else? 1st of Jan. Aditya asks when Builder, right? Builder is getting launched as he promised 1st of Jan 2024. So we are going to launch it live. So yeah, we'll have a discussion on Tuesday and we'll plan it, and then I will post the links and everything early next week. On Monday, I am thinking of relaxing, just switching off everything and then kind of being offline. But yeah, let's see how that goes. Usually it doesn't go as I plan. I get some motivation to do something and then I do it. But yeah, yeah, Aminu. I know. So Aminu says still confused. You'll get it. Uh, no worries. Rewatch because I have gone through this asset liability, this credit debit thing, I think 4 times now. Even my younger brother tries to explain me. The bank thing, he came and randomly asked me when I told you about this, why then the bank sends you a credit message when you actually should have got like you actually debited your account. But yeah, that is how it is. They consider it their debit, their credit, sorry. Yeah, that kind of stuff. But yeah, now I got it, so maybe rewatch and you will get it too. Rewatching always helps. Probably at 2x. So yeah, my plan for next year probably uh, uh, keep working on manual dot that build with Hussein.dev. So this is I've been working on silently on this. Yeah, Discord people know because I post everything on Discord. So if you want to be updated on what is happening behind the scenes, just join in the Discord server. Like 100 plus members already. So that is also one thing we achieved in 2023. Okay. Yeah. So I can share my screen while talking. Probably that's a better. Once Umair is back, where is my screen share? Yeah, I am not here. Okay. Where is video capture device? Existing Z1. Yeah, now come on. Yeah, I haven't set it up properly. So yeah, this is the missing Frappe manual. And I have worked on this, like I've started working on the cookbook that I promised during the conference. So this contains a lot of examples now. Not a lot in the sense, but good examples at least to start with. So how to add a link field, filtering link fields, right? With scripts that you can copy. HTML field in form view, how to use this nice HTML field plus a script to show custom HTML fetched from the backend, right? And there is a example of script report to how to get child tables in a row, single row child table data. So full examples. I think Umair is back. Hi Umair.
Hey, hi. I'm sorry.
Yeah, welcome back.
Yeah.
No issues. I was Yeah, let's continue. I was just giving an overview of what I have been working on for the past
Nice, nice, nice.
1 or 2 months. Yeah. Yeah,
Great.
let's get back.
Yeah, so very
Yeah. Yeah, yeah.
double entry accounting system. It's as I said, right? This guy, uh, Luca Pacioli, in
Mm-hmm.
Venice, and 1940, 1490 for the book he wrote. He actually mentioned the double entry accounting system, and it's
Mm-hmm.
pretty simple.
Mm-hmm.
All the examples, actually, we're talking about two accounts, right? That if it is an expense account, then what is the other account which will get impacted? Or if it's a rent
Mm-hmm.
account, or will it be a bank account or a cash account which will get impacted?
Mm-hmm.
It simply means it's basically in any accounting entry, there'll be minimum two accounts. If one account is
Mm-hmm.
getting debited, another account will get credited. If one account is getting credited, another account will get debited.
At the same
And
time, right?
yes, and the sum
Okay.
of debit will be equal to sum of credit. The sum of debit will be equal to sum
Mm-hmm.
of credit. For example, in this example, we were talking about giving a deposit to shop owner.
Mm-hmm.
If we are paying 5,000 in deposit to shop owner, our bank account will get impacted by the same value,
Okay.
right? If we are paying 50,000 in salary to the employees,
Mm-hmm.
our bank account again will get impacted by the same value, right?
Okay.
50,000
So
will
the net
leave our
impact
bank account.
is zero, kind of.
Yes, so in we can't say net impact is zero, but debit and credit is always equal. In a
Okay.
given in any entry you make, debit and credit is always equal. So any
Mm-hmm.
transaction which we talk about, you have to basically just think about which accounts
Mm-hmm.
which will get impacted, which debit account, which credit account,
Mm-hmm.
what which account will get debited, which account will get credited by how much value, and is it like total coming out to be same is what you
Mm-hmm.
have to kind of keep in mind. So we'll do multiple entries. I think you'll understand. And now
Mm-hmm.
coming to ERP next. So we'll use ERP next as an instance wherein
Mm-hmm.
we'll make entry to understand the basic accounting only, right? So we'll stick to
Okay.
accounting and eventually we'll use ERP next for learning our concepts. So firstly, when we talk about accounting, we are talking about a company, right?
Mm-hmm.
So there has to be a company first. There are, for example, if let's say we want to do a personal accounting also, Hussein is actually becomes an entity,
Okay.
an individual account around which everything will be circumferencing. So same way, if I'm doing personal accounting, it will be around there. If you're doing it Zenith craft, it will be around Zenith craft. Okay? So the first
Mm-hmm.
thing you have to do is basically ensure you have an entity for which we are doing an accounting. So we
Mm-hmm.
have Zenith Craft Furnishing as a entity for which we'll be doing accounting. And since
Mm-hmm.
we'll be doing an accounting, this whole, the Jing Bang we learned. For every
Mm-hmm.
company, there will be groups and subgroup, which we mentioned as
Mm-hmm.
chart of account. So for Zenith Craft also, there will be
Mm-hmm.
chart of account, which will be pre-populated in ERPNext. And here you
Okay.
can now see you have asset and liability. Together gives you what? What does it give you? Asset and liability. What
Asset and
together gives that
liability give you balance sheet.
balance sheet. And what about these two?
Income and expenses give you profit and loss statement.
Okay, very good. I'm hopeful. I'm I'm keeping my hopes alive. All right. So and this thing put together, we get chart of account as I mentioned, right?
Mm-hmm.
And if we basically go on creating another company, just for the sake of example, let me just create another company called say Alpha Chemicals,
Okay.
which is in AED, for example, right?
Mm-hmm.
It's in United Arab Emirates and stuff like that. And there's no linkage, so we won't establish any link. But the moment I create a new company in ERPNext, what will
Mm-hmm.
happen is basically this whole structure will be recreated for the new company because every company
Okay.
will have its own financial statement to be managed. So if I come to
Mm-hmm.
Alpha Chemical and click on chart of account, it brings me on the chart of account, and here we should find two options now. Okay, just to get rid of cash. Now, if I click on it, you see Alpha Chemical is also there, right? But Alpha
Mm-hmm.
Chemical has its separate books of account. Now here
Mm-hmm.
there's equity is a separate group because maybe in AED or in UAE the way they do accounting is a little bit different, but fundamentals are same. You know,
Mm-hmm.
even if you have equity as a separate group, eventually it belongs to liability only. And that's why I
Mm-hmm.
had this slide that in some financial statement you might see equity as a separate thing, but the right way to see it is basically liability plus equity is equal to asset.
Mm-hmm.
Okay. So even if you see equity as a separate group, no issues. When we see reports, it will be part of liabilities only.
Okay.
And in India, we have the practice of only going with the four accounting head: asset, liability, income, expense.
Mm-hmm.
Okay. Uh, now everything is zero. Zenith craft is made, but
Umair, can you do full screen on your browser?
yeah, sure. Yeah. So Zenith craft it has happened. Let's say
Mm-hmm.
whoever is the owner, for example, let's say capital account. In the capital account, we have shareholder fund and the shareholder funds. Uh, can we create a new accounting ledger? Okay. So under this, sorry, liabilities. Let me convert this into a group shareholders fund. So this is also a very, very specific feature, so to speak. From action, you can convert this to a group. This group is
Mm-hmm.
checked for shareholders fund now. And let's say
Mm-hmm.
is a capital account. It is owned by Hussein's Hussein's equity.
Okay.
So what I mean is basically Hussein is actually putting his hard-earned money and he's betting on Zenith Craft that he'll get some returns,
Okay.
right? So Hussein puts 100,000 INR into Zenith Craft. Right? That's
Okay.
how company starts, right? Or maybe I should have
Mm,
asked you
capital,
how company starts. Yes.
not capital. I don't
You
know if
have to you
capital
have to
is the
first
right
get the
word,
capital.
but
Yeah, you have to get the capital, right? That's why you have
yeah.
eventually you have a capital account. Under capital account, you can have multiple partners. You can
Mm-hmm.
also have Hussein, you can also have Dharmesh, you can have
VCs
Naveen
also
and
come here,
Kumar.
right?
Yeah,
Virtual,
VCs will
yeah,
also come
this
here. Absolutely, absolutely.
venture
That's why
capitalists.
there's a hierarchy. You
Mm-hmm.
you said it right. I mean, the capital is what you need, and you can actually have multiple resources for raising capital. And Hussein is one
Okay.
of them. You know,
Okay.
so Hussein, the first thing what Zenith Craft need to be able to do anything,
Mm-hmm.
what would it need is a capital, right?
Mm-hmm.
Now, once we have the capital, let's say
Mm-hmm.
we have the capital. So, what will be the impact on the books of account?
Mm-hmm.
Is basically what the very, very first accounting entry will be. So, what will be the impact on the books of account?
So, since this is a liability,
Mhm.
liability
Why
code,
liability? Why
LIC,
liability?
credit. Because they have given capital, but they will want it back, right? So the company has to pay
Okay.
them back. They
Mhm.
will want their capital back, maybe probably with some interest or whatever.
Fair enough.
But
So,
yeah.
which will be the account? It will be which will be involved here? The group
So liability,
liability. Which liability? If I ask you
liability in,
specifically,
from
which liability?
which liability, as in I didn't get you.
Or which account on the liability side will be involved? If let's
So
say Hussein's putting his $100,000, 100,000
so
rupees.
Hussein's equity will be involved.
Okay, so Hussein's equity.
Hmm.
Which other account? Don't worry about debit credit now. Which account? Which other account?
Other account, right?
What would
So either he transfer to the bank
hmm,
or he transfer or he gives cash. So we have to see.
okay. Yeah, so let's say it's in bank. So where will be the bank account
Asset,
on asset? Okay, which asset? Fixed asset, current asset.
current asset, because it
Okay.
is like a current asset. So it's not
Hmm,
something like a machine to keep. It is the money we need
hmm,
to spend, right? So that's a
hmm.
current asset.
Okay, so here
Bank
we have bank
accounts.
account mentioned. Okay, in bank account.
Hmm.
Okay, which bank account?
Yeah, this week we created, me and Dharmesh,
Okay.
in the last
So
episode.
you can also have multiple bank account, right? For example, I can have
Hmm.
ICICI. Bank, Jagdalpur branch.
Yeah. Cool.
And here we can also put some number for your reference. You can say it's a bank account. And that's why you have this categorization, bank, cash,
Mm-hmm.
right? So that we can filter out some of them. So you have this account. So we can go with HDFC Bank, not even an issue. So now we have identified two accounts, right?
Mm-hmm.
So we have Hussein's Equity and we have
HDFC Bank.
uh, HDFC Bank account.
Mm.
Now, what is the value? Value is 1 lakh or 100,000,
100,000.
right? In
Mm.
cash account. Now comes what is debit, what is credit, right?
Okay.
So what will be debit, what will be credit? So we'll take one thing at a time.
So Hussein's equity is a liability, right? So liability is credit. So the liability is increasing.
Hmm.
That means it will be credit. Yeah.
Sure.
Yeah. I'm sure.
So what will be the impact on bank?
So bank is an asset. Asset
Hmm.
is AED, debit base.
Hmm. Hmm.
So it's also increasing.
Hmm.
So debit increases debit. Yeah,
Debit.
yeah,
Is
yeah.
your debit credit telling?
Yeah,
It's
it
telling.
looks like it telling. Yeah.
That's an entry,
Oh, okay, nice.
right? So all we do is basically now just to map this thing, which we did in Excel here, spreadsheet, is
So
simply
Dhruvin
go,
says HDFC credit. Wait a minute.
so
Why
why
Dhruvin?
HDFC credit?
Why
Because you can
why?
see maybe he's going with the like, SMS, bank's SMS. That when we receive the money, we can get a message
Money.
called
So
your account get credited.
account has been credited with that. That's what I've asked, right? Like because I think they mean that from their side. For them, that is a credit, right?
Yeah, I'm not an like banking expert, but as per the accounting convention, if money is coming
Yeah.
into your bank account, this is debit.
Mhm.
Yeah, maybe it is
Is
related
it
to that,
clear,
as you
Dhruvin?
said earlier.
Okay.
So, is it okay? Can we move on?
Yeah, let's
So
proceed.
let's just pass this entry. So what we have done is basically in the chart of accounts. In the chart of accounts,
Hmm.
we have created an accounting ledger, right? Just to ensure that
Hmm.
we have so that we can pass an entry. We first created instant equity, it is zero, and
Hmm.
we also created a HDFC bank account, which is
Hmm.
zero. Now, to pass an entry, what we'll do is basically we'll on the accounting in the accounting entry
Hmm.
there is something called journal entry. So sales invoice is actually made when you're selling goods to customer. Purchase invoice is made when you're buying goods from the supplier. Payment
Hmm.
entry is very generic transaction when you're actually receiving payment or making payment, right? But
Okay.
this is internal transaction per se, uh, or an entry. So it's very open ended. Journal entry is very open ended in
Hmm.
that sense. What I will do is basically here you can select accounting type, bank entry, cash entry, credit card, contra voucher. Each of which
Hmm.
has some definitions. Some of it is automatically set. For example, deferred revenue, deferred expense. The type will be set
Hmm.
automatically because system creates these entries. Same with depreciation entries is created by the system. So for
So,
the for
one
the
question
for
here.
the defining an accounting entry, you can use
Umair,
one
can
of
you
these
hear
type,
me?
or you can proceed with journal entries. Yeah, yes.
No, no, sorry to like interrupt, but I had a question there. Can you go back? Can you go back? So, does sales invoice and purchase invoice create a journal entry, or there is some separate entry they create behind the scene?
No, no. So we'll see that. We'll see that. Now, what we
Okay,
saw in
cool.
this Excel, just remember this as general ledger. Okay, just remember this as general
Okay.
ledger. So let's create an entry.
Mm-hmm.
We have to just replicate this Hussein's equity HDFC, put debit credit values, save submit, and we are
Mm-hmm.
done. And we'll
Okay.
also have to put a posting date. Let's say we are starting business on 1st of December. So posting date will be the date on which your this entry will go into our books of account.
Okay.
Okay. So here I select. Hussein's equity,
Mm-hmm.
and I'll select another account as HDFC. Fair
Okay.
enough. Now we have these two columns. So
Yeah,
we have,
this we figured out.
right? So we already figured out that this is here and this is here. Is
Okay.
it telling? No.
No, no, no.
I think there's one.
So it also shows the difference. Okay, now
Yeah.
it is telling.
So if I basically put it like this, one
Mm-hmm.
zero less and this different, and if I try to save, it will give us a validation total debit must be equal to total credit. Difference is 90,000. Means in ERPNext, this is hard coded built in that you can't have an accounting entry wherein debit and credit is not right. So as
Mm-hmm.
per the double entry accounting system, no matter
Mm-hmm.
how many rows you add,
Mm-hmm. Debit and
eventually
credit
it
should
will
match
get
tally.
okay. I can add 10 more rows here, right? And
Mm-hmm.
have say 899 456 and put a
Mm-hmm.
different values in different rows, but eventually debit credit has to 10.
Mm-hmm.
Okay. Now, now it's looking very obvious to us. But when we see this same entry 5 months 5 months down the line, we won't be able to make sense of it. So what
Mm-hmm.
accountants generally do is basically they put narration and they put reference number. So when this
Mm-hmm.
entry happened, of course we'll get some acknowledgement, right? That this is the
Mm-hmm.
CRA number. That transaction was made on this, and then we put some narration that investment
Initial
by
investment. Mm-hmm.
Hussain
Mm-hmm.
into Zenith Craft. Okay, so you have to put this narration so that in future you can make sense of it.
Okay.
When you save and submit this accounting entry, it got submitted, right? Now it didn't show any validation message. Debit and credit
Mm-hmm.
is telling, and this this is also narration is also generated, pretty much like you see in
Remark.
the bank account,
Mm-hmm.
and stuff like that. Now when we go to view and see ledger,
Okay.
so we see a general ledger report.
Mm-hmm.
Wherein it is reflecting same thing, which account were involved on which date, what got debited, what got credited, and it's telling, right? Over the period, when you see, of course, there will be some opening balance also. That
Mm-hmm.
before you made this entry, bank account already had 5,000, for example, or say
Mm-hmm.
500,000. Now
Mm-hmm.
500,000 got added here, so it became 600,000.
Mm-hmm.
So we'll see all those impacts, but this is general
Mm-hmm.
ledger entry. And if you
So
go
one
one
thing
level
here.
down, if you go, let me just
Mm-hmm.
complete that question. If you
Yeah,
go
yeah,
one
sure,
level
sure.
down, is
Mm-hmm.
basically there's something called JL entry. So general ledger entry is actually a report view of
Mm-hmm.
something called GL entry.
Okay.
So with the moment we made this transaction, for each row here which we passed,
Okay.
Hussein's accounting and HDFC bank account, it actually system made a GL entry in the backend. That
Mm-hmm.
HDFC bank account, the cost center, let's not worry about it, but debit amount was 100,000. Okay.
Mm-hmm.
And it got passed through this channel entry. Which financial year?
Okay.
So financial year is important. Is it opening, not opening? Uh, and then what is the balance after that? So you actually have to maintain the ledger, right?
Mm-hmm.
And same way, for the account, another account, stand equity also, it
Mm-hmm.
mentioned that the amount
It
had
was
a credit
credited.
value. Yeah, what was
Mm-hmm.
the currency, on what date, through which entry it happened, what was the against account and stuff like that, in which financial
Mm-hmm.
year. So based on that, based on the GL entries, you basically get a financial, the general ledger,
Report.
and
Mm.
yeah, report, and based on that you get a chart of account, or you can also say financial statement. So here you can say now asset and liability both has same value.
Mm.
Okay, capital account is 100,000 because it is Hussein's equity eventually has the balance. Now it's just basically kind of percolating on the parent group level.
Mm-hmm.
And same way you
Makes
have on
sense.
the current asset, you have bank account setting. Okay. Now let's move a little
Mm.
fast. But you had some question, I'm sorry. So you can ask that question and then
Yeah, yeah, then we can move. So my question was with the negative sign on the general ledger. There was -1. So is that a convention in the balance side?
yeah. Generally, basically, consider debit as a balance, credit as a negative sort of. So you
Okay.
don't have to worry about it. at this point of time. It will eventually just fall in place.
Cool. Yeah, we can proceed.
Okay. Now the another scenario. Let me jump to my use case.
Mm-hmm.
So we have set up a new entity. We defined
Mm-hmm.
the owner,
Mm-hmm.
and we separated that Hussein is an investor, but the owner is Zenith uh, Craft, right? Investment has
Mm-hmm.
happened. Now, what do we do with that investment? Let's say if we had to basically set up a furniture shop, what do we need? Next thing,
We need raw materials. We need some place where we will set this shop. We need
you need a place, right?
tools,
Yeah. You need a
machinery.
place. So just to keep
Yeah.
it just simple, let's assume that we simply buy the chairs off the shelf from another
Mm-hmm.
from another vendor who sells at the
Mm-hmm.
wholesale. Okay,
Okay.
just in the interest of not complicating things, we'll simply
Mm-hmm.
get it off the shelf from another wholesale vendor. But
Okay.
one thing which is must have is basically a shop,
Okay.
right? So what is the now if I were to ask you, what will be an entry like if we have to basically pay a deposit for a shop?
So two accounts will be involved, obviously.
Okay,
First will be the bank
let's get
account.
in audience if someone has to give it a shot. I think we already discussed it
Yeah, yeah.
briefly.
Yeah, audience. Two accounts, debit, credit, maybe 40, 30,000, right? 40, 30,000, anything.
Yeah, yeah, let's say 20,000. Okay.
Anyone from the audience? Or
Just
should we
identify the
carry?
account. Don't say what is debit, what is credit, but just
Yeah, yeah, just
identify the account.
identify the two accounts that will be involved.
And
Let
if it
me
is
see how
not
many
there, then
people
we'll
are
have to
watching.
set up an account. So
Yeah, I'll wait for the audience. There is a 1 minute, I think, buffer. But yeah, let's wait. I'll drink water in that time.
no one. So I can see the chat.
No one yet. Come on, audience. Yeah. Azhar says on purchase receipt? Question mark. No, I think Umair has asked which two accounts will be involved. So let's go from there.
Two ledgers. Wow, counting ledgers will be.
No one? Or I think they. No, no. So Umair has asked when you pay the deposit for the shop, which two accounts will be involved in this transaction of paying the deposit? Is the question clear? Yeah. So Umar Khan says bank account and
So SDFC, let's say SDFC Bank, and this
yeah,
will be another account.
security deposit asset.
Okay, so we have two accounts. It's on the asset side.
Mm-hmm. Yeah.
All right.
Mm,
And now let's say 20,000 is the amount if we
mm-hmm.
pay. So what will get debited? What will get credited? What is increasing? What
Mm.
is decreasing? Like you
So
missed it.
BN Mantra says security deposit debit. Okay. Bank account also debit. Liability. Uh-huh.
Bank account debit.
Yeah.
How do we balance it?
Yeah, both can't be debit, right? At least one of them should be
Can't
credit.
have 40,000 debit and 20,000 credit. What is the impact on the bank account if we are paying? or Zenith Craft is paying 20,000 to the shop owner.
hmm
So what will be
So,
the impact?
so BN Mantra says credit now, but let's understand. So bank account, so we are paying from the account. So uh,
Firstly,
the
what is the base
balance,
for bank? What is the base for bank?
bank
Debit or
is
credit?
an asset. So
Hmm.
asset is debit,
Hmm. Now what is
and
happening?
debit
Now
is
bank
going
balance is
down.
increasing. Yeah.
It is decreasing.
Hmm.
So decrease means credit.
Hmm.
Credit. Okay. Credit. Yeah.
Does
Now
it
it
tell
is
you?
balancing. Yeah. Now it tallies.
Okay. So now to be able to make an entry, what do we need? We have HDFC bank account. Let's see if we have a security deposit account on the asset side. So on the asset side, current asset, fixed asset investments, temporary accounts under current asset, securities and deposit under deposit, earnest money. We don't have, say, shop security deposit.
hmm
And okay, no need of account type here. So now we have two accounts. We have shop deposit and we have HDFC bank account here. Right? HDFC bank account. Now go to journal entry. In this journal entry, again I'll make a new accounting entry. And December we got
You.
from Hussain. On second we got a shop. Here
hmm
it is which account?
Shop.
Shop security deposit against HDFC bank account, right?
HDFC Bank. hmm
Now what is the values here? HDFC bank 20,000 credit and this is safety deposit, security deposit 20,000 debit. So we'll put 20,000 here
hmm
and bank account we'll put 20,000. Okay.
hmm
Again we'll put some reference number, some reference rate against shop rent. Okay, we saved and we submit. Okay, now and if you notice both these
Umair, you got muted. I can't hear you.
no I'm very much not.
Oh, now you're back. Now you're back. Maybe the earphone
Okay, okay.
is.
Okay.
Yeah.
So,
Please.
yeah, so the simple thing is basically, yeah, this entry went through
hmm
security deposit and HDFC bank account. Pretty
hmm
simple. Now let's see the impact on the general ledger.
Okay.
So on the general ledger, you see security deposit debit, HDFC bank
hmm
account credit. Okay, and
Okay.
what I was saying is basically in an entry, it is very much possible that both the accounts are on the same side. This is also on the
Hmm.
asset side and this is also on the asset side. Okay, so it's not
Okay.
necessary that it has to be sort of if one is just from asset, other has to be liability, one is income, other has to be expense. It's not necessary.
Okay.
And when you talk about general ledger, here we can basically see that it is based on a voucher. You can also remove this filter and you can actually see it. Let's say, for example, we want to see it for HDFC Bank. So here I'll just
hmm
put the filter for HDFC Bank, and I want to see all the
hmm
transaction happening from 1st of Jan till. So here you see that at first it was one sorry 100,000. This was actually got debited because of Hussein's equity account,
hmm
and on second 20,000 got credited. So the balance is
hmm
80,000,
hmm
and this was against this particular entry and this against account and narration. So here
hmm
in a sequence, basically, then you can make a complete statement. You get a complete statement. So to
Okay.
your question, right? Debit really generally adds credit d- reduces from the debit, so you get the balance.
hmm So now 80,000.
Yeah.
Then balance is 80,000. Debit. Uh.
On first of Jan, 1st of December, we received
hmm
100,000. So if the one balance was 100,000, on second
hmm
of December, we paid 100,000, 20,000 for shop rent, so it balances 80,000.
Hmm.
Okay. So the total then credit, what is the balance you see? You know. Okay, hope this is
So
clear.
earlier the debit and credit was matching up. Now it isn't.
So this is not an accounting transaction. This is actually going to be seeing a balance for a specific bank account, for a specific account.
Okay.
We basically see it for an let's say for all the accounts. I have removed all the filters, and if you see, it's
Hmm.
120,000, 120,000.
Yeah, now it
Even
balances.
if you go to let's say balance sheet for example. So
You again got muted. Can you try fitting your earphone ka wire? Probably.
okay,
I don't
I've
know why it's.
kept it aside so it won't get
No,
disturbed.
no, no. Yeah, yeah.
Yeah. So on
That's
the
fine
balance
now.
sheet till now also we have 100,000
Hmm.
on the asset side because but 80,000 only in bank account and 20,000 in the security deposit. Total is 100,000. On the liability
Hmm.
side, we have not used I mean equities because bank the company must have issued equity, right? So Hussein still
Hmm.
has equity of 100,000. So it's
Hmm.
all tallying thing now. Also.
Hmm.
Okay, same way in another tab we can also have it will be useful in future. We can also have a profit and loss account, profit and loss statement.
Hmm.
So till now we have not done any business, so it's all zero zero. Okay,
Hmm.
now let's move. I think a little bit faster. So we have a rent now. Now what we have to do
Hmm.
is
Yeah, again your
basically
earphone. Yeah, came back. It goes on and off kind of.
okay. So what we'll simply do is basically now we'll just go to a shop, a wholesale shop maybe. From there we'll buy
Hmm.
a chair and we'll uh,
Hmm.
sell it, right? So we'll simply do a buy and sell transaction and see how much profit we are in, and if books are
Okay.
closing or not. So
Hmm.
now I can simply make a sales invoice and purchase invoice also, but since ERPNext is an integrated transaction, I'll start from a selling module.
Hmm.
In a selling module, right, let's say, I'm sorry, in a buying module,
Hmm.
let's say, do we have items? So we have elbow blend chairs, which is available, which is like all we'll have to receive this
Your.
item in a warehouse. So we
Hmm.
have
Hmm.
a couple of warehouses already available. Because then it, I think we have stores, work in progress, and what. Let's say we got this warehouse into, can we rename it? Oh no, we can't
No.
rename it. But let's get a new warehouse called say uh, Jagdalpur store.
Hmm.
Okay. Always remember in ERPNext,
Hmm.
there is a feature called default accounting or a perpetual accounting. So if I go to Zenithcraft, in Zenithcraft under stock setting, there is a feature called enable perpetual inventory. In a simple terms,
Hmm.
what it means is basically everything which we will buy
Hmm.
from our
Your.
inventory,
Hmm.
it will
It
have
went off
impact
for
on
a few seconds. Hmm.
the stock in hand account. And where does this stock in hand account sits? Where should it sit? Stock in hand account? Any ideas?
Asset.
Asset. It will
Stock
sit on the
in
asset side,
hand,
right?
right?
Yeah. So this is I mean, when we created a company, by default, it created many accounting ledgers. So stock in hand is
Hmm.
also one such accounting ledger. So even if we
Hmm.
basically make any entry into our Jagdalpur store, you will see that
Hmm.
it will basically have impact on the stock in hand account. Okay, so
Okay.
don't get surprised. I'm just giving you heads up. So we have an
Okay.
item when we have a store, Jagdalpur store, right? Now what we'll do,
Hmm.
we'll simply create a purchase order. What we can do
Hmm.
is basically we can go to buying module. From buying module, we can also make a material request and purchase order can be issued against it. Uh,
Hmm.
right now, for in the interest of time, we'll simply make a purchase order.
So purchase order is kind of also an entry, right?
Yeah, purchase order is an entry. So here I have say desire furniture wholesalers. Okay, it's a registered entity and whatnot. But for now, we'll just proceed with the supplier.
Mhm.
Okay, and here I'll select this item. I'll go blend
Mhm.
shares, and we need this item by say 6th, and we need 10 quantity of this, and we are purchasing this for say 1,000 per chair,
Mhm.
or say 3,000 per chair. Okay.
Okay.
So we save this. Required date cannot be before transaction. So this is a validation. So we'll have to basically amend the transaction. That I'll have to assume that I'm making
Mhm.
simple validation, very uh, mm, intuitive. So now I'm just telling Desire Furniture that I need these sets by 6th. Okay, and I sent this on 4th
Mhm.
of
Mhm.
4th of December. Now on the 6th, let's assume they deliver me the checks. Okay,
Mhm.
so again, this till now there is no impact on the account. If I refresh balance sheet, it is 1 lakh, 100,000. Similarly, no impact
Mhm.
on the profit and loss statement.
Mhm.
What happens is basically when I create a purchase receipt, when I create a purchase receipt,
Mhm.
and I am accepting 10 shares into my warehouse,
So purchase order is basically
it's just an
okay.
acknowledgement. You can say that okay, we have a contract.
Acknowledgement that okay, we are going to buy from you,
Ex-
but it hasn't been done yet, the transaction.
Only when basically purchase receipt is made, the
Mhm.
stock will actually reflect into your warehouse.
Okay.
Okay. So here I'm saying the accepted warehouse is Jagdalpur warehouse, Jagdalpur store. Okay.
Mhm.
This item, inventory and whatnot, but I'll just spare that for now. And I'm receiving this item on 6th because 6th was the date committed, right? And
Mhm.
here you'll notice with an item, there is a warehouse section, right? So
Mhm.
Jagdalpur warehouse is updated here.
Mhm.
And for the sake of accounting, expense account is cost of goods sold, which is defined by default in the system, but it will not be impacted here. We'll just see when it will
Mhm.
get impacted. So I'll just
Okay.
save this entry for now. Purchase receipt, save and submit. Let's see if it gets submitted. Yes, it did get submitted, right? So what
Mhm.
happened? What happened now is basically if I just refresh this, till now we
Mhm.
only have a balance in our bank account and we have balance in our.
Mhm. Your
What
voice
it
again
does,
went. Now it came back.
okay, what it does is basically
Mhm.
it has increased the value from 100,000 to 150,000 because
Okay.
goods worth 30,000 got added into our assets.
Okay.
We have
Stock
not
assets.
paid for that yet. We will pay, of course, we will pay. And when we pay, our
Mhm.
bank account will get reduced, right?
Mhm.
But for now, since we haven't paid, the value of asset which we have received in our warehouse is reflecting into
Mhm.
stock in hand. Okay,
So
this
what
is
was the other entry?
yeah. The other entry was actually an adjustment account, stock received but not made, because we are liable to pay, right?
Mhm.
We are liable to pay. But since invoice is not made yet, system has used this provisional account to update.
Mhm. Mhm.
Right? You have to pay someone at some point of time. So to raise the
Okay.
provisional liability, it has used this account stock received but not billed, and it has
Mhm.
credited it by 30,000.
Okay.
So
Makes sense.
this is an entry which is handled by the system, and the same impact you
Mhm.
will see in the accounting ledger entry against the purchase receipt also. And that's why I mean when we say uh, other accounting, for example, like QuickBooks and the things is basically not completely integrated. This is what we mean. That when you make account with the hardcore stock transaction like stock received, purchase receipt, delivery note, or payroll entry and stuff like that, it doesn't have direct impact on the books of account. But here you can see that I made a hardcore accounting transaction. Right? I'm sorry, I
Mhm.
made a stock transaction, not the accounting transaction. but still it took care
Mm-hmm.
of the accounting in the backend. You don't.
Mm-hmm. Makes sense.
We had
I.
the in the company master only. We had the default account set. It took care of the accounting all by itself. All we had to do is basically select correct store, correct item, to correct quantity and values.
Mm-hmm.
Okay. Now, just for the sake of accounting, we'll make a purchase invoice.
Okay.
So purchase invoice is actually a proper acknowledgement that okay, we bought this item and we are liable to pay.
Mm-hmm.
So in businesses, what happened is basically companies give credit. It's
Mm-hmm.
not like we went to Desire Furniture Wholesale and we basically paid 30,000 and then we came back and said that deliver me the chairs. We said that
Mm-hmm.
I'll pay you in 30 after 30 days or something like that.
Okay.
Because in businesses we have credit transaction happening,
Mm-hmm.
right? And that's why there is this thing called approval.
Accrual. What is it? Your voice
Credit
went away.
sales.
Can you?
Approval means
Mm-hmm.
credit sales and purchase. If the simple thing is basically it means credit sales and purchase. When you are buying on credit. When you are selling on credit. Your
Okay.
customer will also not pay you on time. And your when you are buying, you will also not pay to your supplier on time.
Okay.
It's an industry norm.
Mm-hmm.
Everyone generally buys on credit and sells on credit, so that you can rotate money. Okay.
Mm-hmm.
So here simply, I mean, all the values will be pretty much the same. You have a supplier, the company is already there.
Mm-hmm.
Here you can amend the date to week 6 or something else also. And right, so items value and everything remains the same. And
Mm-hmm.
here you can in the payment section you can have if there is a transaction you can have that by what date you will make payment. You can have let's say 6 by another say in after 30 days we'll make a payment.
Mm-hmm.
So you can have payment terms like that. So it's an accounting transaction, but what it does is basically now it clearly establishes payable. So if I just if I just redo this, now here it's actually showing balance into stock receipt but not billed account, right? But
Mm-hmm.
now since we have made the purchase invoice, system clearly knows that actually the liability is
Mm-hmm.
not open in the air. It's not in the air. It's actually specifically against desired furniture wholesaler, right?
Okay.
So what it does is basically if I just do a refresh, it the balance is same. It's 130,000, 130,000. What it did is in the
Mm-hmm.
backend is basically it just shifted that stock receipt but not billed
Mm-hmm.
from but not billed
To
account to the
account
accounts
payable.
payable account
Mm-hmm.
in the creditor account. And do you
Okay.
want to know which supplier? Because we should explicitly know, right? To whom
Mm-hmm.
we are liable to pay. We can
Mm-hmm.
always go to accounts payable report and see the breakup,
Okay.
right? Because at any point of time, you will
Mm-hmm.
have 20 suppliers to whom you will have to pay, right? It's not as
Mm-hmm.
simple as this. So to desired suppliers, how much you have
Mm-hmm.
to pay? You have to pay 30,000,
Mm-hmm.
right? So this is what actually is mean by the accrual invoicing.
Mm-hmm.
You have 30,000 actually updated as a payable into your balance sheet against this particular supplier, right?
Mm-hmm.
And when you actually make a payment, you make a payment entry against the invoice, and that could be let's say after 1 month.
Mm-hmm.
And now that we are making payment entry, what will be the other account?
So payment entry,
One account
bank.
will be credit account, another account will be bank account.
Yeah.
Pretty simple. So in the accounts master, it automatically fetches HDFC Bank. It's a feature
Yeah. Yeah.
that it recognizes what is your default bank account. And now that you
Mm-hmm.
are making payment,
Mm-hmm.
system knows that of course you'll be making payment from your bank account or cash account. And now
Yeah.
that we have
I think
HDFC
there was
defined
a
as a
setting
default
in
account.
company master we
In the
set.
company
Yeah.
master, there is a setting.
Mm-hmm. Yeah. Yeah. We said that in last episode.
Yeah. So
I
so
recall
it's
that.
actually picking value from there.
Mm-hmm.
And 30,000 is the payable amount. But
Mm-hmm.
how would it get adjusted? It will get adjusted against this purchase invoice. So you can
Okay.
have a multiple purchase invoices in future against which you'll make a single consolidated payment entry.
Makes sense. Uh,
You'll,
mhm.
you'll keep on buying, right? And you'll say, okay, I'll settle everything at once.
Mhm.
So that's also pretty normal in businesses. So you can have one single payment entry happening against multiple purchase invoices.
Makes sense.
And again, same thing, you have transaction detail. If you are making payment, there will be some CRA number generated. There will be some bank entry generated. So you just update those. So eventually, what has happened is basically now your this was 30,000 was there against your creditor a
Mhm.
payable,
Mhm.
and still had 80,000 into your bank account, which was not correct, right? Because you made purchase of 30,000, something should have reduced.
Mhm.
So if I do a refresh now, reload now, what has happened is
Mhm.
basically now bank account is reduced to 50,000.
Mhm.
General ledger here. So in the general ledger, in the credit account for
Mhm.
this particular supplier, Desire Furniture, it reduced the payables.
Mhm.
Payable is what? Payable is liability, right?
Yeah, yeah.
Liability
Mm.
is liability is what debit or
Liability is credit. Credit.
credit. But now
Mhm.
that we are making payment to the supplier, what is happening with our liability? It is
Credit is
reducing,
reducing. Credit reduces,
reducing.
which means debit. Debit.
Hence, it got debited. And our
Mhm.
bank account, since we are
Mhm.
making payment now, so bank account
Mhm.
is what? Debit or credit?
Bank account is asset, so AD, debit.
Debit, debit. But now is it increasing or decreasing?
Bank account, the money went down, so debit is going down. That means credit. Yeah,
Credit is happening, right? So makes sense,
perfect.
right?
Yeah, makes
Right.
sense.
So eventually, what happened? Even though there was adjustment account in between, got
Why?
normalized
Mm-hmm. Mm-hmm.
against. This again came back to its original status. In
Mm-hmm.
between, there was payable. Then that payable got settled and everything. But
Mm-hmm.
eventually, we have 80,000 reduced to 50,000 in our bank account, and we have 30,000 worth stock in our store, which we can
Mm-hmm.
sell to our customers.
Okay,
Understood?
understood. Got it.
In between, since we follow the approval accounting system,
Mm-hmm.
and generally businesses follow approval accounting system, we had this provisional account. And then after the provisional account, we explicitly know that, okay, it's actually a creditor to whom we are supposed to pay. And then we made
Okay.
the payment. And when we made the payment, the balance in the bank account went down, right?
Okay. Makes
So
sense.
till now again, 100,000 times.
Mm-hmm.
Okay. And again, in the accounts payable, it's yeah, in the accounts payable, it was showing this invoice of 30,000, but now we made
Mm-hmm. Now it should be
accounts
gone.
payable. It's gone. Okay. And in
Mm-hmm.
the profit and loss statement, do we have anything to yet? Nothing to yet. Okay.
Why?
Now,
Because we
because we
did some
haven't done
expense,
any,
right?
so exactly. So there is two types of accounting methods. Good that you ask actually. Um, the item which we purchased, is it an expense?
Yeah, this is an expense, right?
So why is it not reflecting in the asset here? I'm sorry, in the expense. What anything any reason that this could be there behind it?
Mm, uh, okay. Now, on a second thought, I think it is not an expense actually. We got some asset, right?
You got
So
some asset.
actually, that 30,000 went into purchasing some asset. So that should be inside assets. That 30,000, somewhere in assets. Where is
Exactly.
it? Stock assets. Yeah. Okay. Stock
So
in hand.
yeah, so there are two methods of accounting.
Mm-hmm.
ERPNext periodic and perpetual. What you just said is basically why expense is not booked, right?
Mm-hmm.
So that's a fair question. But as per there are two accounting practices. One
Mm-hmm.
accounting practice.
Mm-hmm. Your voice went away again. Can you check, Umair? No. You can remove the earphones, by the way. Like, let's. No, you are not audible now. Now, try again. Go to settings. Settings. Yeah, check audio source, no audio. Okay. Yeah, select that default one. Okay. Yeah. Let's
Audible?
proceed. Yeah, yeah. Now it's audible.
Cool. So, yeah. So let me go back to maybe a bit of basics.
Mm-hmm.
There are two kinds of accounting system: stock accounting. Or there are two kinds of stock account.
Mm-hmm.
One is basically perpetual,
Mm-hmm.
and another is periodic.
Mm-hmm.
Okay. In perpetual, what you do is basically when you purchase something,
Mm-hmm.
you basically use stock in hand account, which is on the asset side,
Mm-hmm.
against your bank account, of course. In the periodic, what you do is basically you directly select the expense account, COGS,
Mm-hmm.
cost of goods sold, or
Mm-hmm.
against bank account. What system? So both is okay, but this has a flaw. The moment actually you have purchased the item and you have
Mm-hmm.
actually sort of put it on the expense
Mm-hmm.
and reduce this, the auditor says no. You
Mm-hmm.
are actually trying to show more expense because till now you have actually not sold this item.
Mm-hmm.
So this shouldn't be on the expense side because this is actually your asset.
Okay.
If once you have sold that item and you then say that okay, we actually bought those items for 30,000, so that's the
Mm-hmm.
expense we incurred. Correct, you bought it
Mm-hmm.
for 30,000, so that was an expense, but it is till the time it is in your warehouse, it is your stock, it is your asset, it is not expense.
Okay.
Okay, it will come to your expense when you have sold it. Once you have sold it, then it will actually come to your COGS, and then it shouldn't reflect in your stock in hand, right?
Mm-hmm.
But till the time it is not in your, till the time it is in your warehouse, it has to
Mm-hmm.
be in the stock in hand account.
Okay. Makes sense.
Uh, because generally, basically, this is also where accountants get creative and whatnot, and can, I mean, they can't, or they will catch them. But if you basically show more expense here, you will have lesser text to
Yeah,
pay.
yeah. Umair, can you switch either this to full screen or maybe the other tab because that's causing a recursion? Yeah, much
So
better.
yeah, so basically here, basically you can actually use it for
Mm-hmm.
uh, showing that okay, we made an overall sale of 50,000,
Mm-hmm.
uh, right? But if you show your stock in hand items also in the COGS, it means that basically you're trying to show more expense,
Mm.
and if more expense means lesser profit, lesser profit means lesser tax,
Okay.
which is payable to the government, and government don't want less tax from you, government want more tax from you, right? So if you make your stock in hand item which is not sold yet, even though
Mm-hmm.
you paid an expense by
Mm-hmm.
paying to your supplier, but it's only a conversion from your money in the bank to your money in the warehouse, right?
Mm-hmm.
Till the time it is in your warehouse and you can sell it, it's as good as money in the bank.
Okay. Makes sense.
Fair enough. So
Maybe if it's sold at 25,000, then it is in loss, right?
yeah, yeah, at whatever value basically you sell it,
Mm-hmm.
if you sell it at 25,000, 25,000 will go into 25,000 will go on the income side. Here,
Mm-hmm.
30,000 will only come
Mm-hmm.
because you bought it for 30,000, right? So in COGS, you always have cost
of goods sold cost,
Okay.
right? If you sell it for 25,000, that's your problem. That will reflect on the income side.
Okay.
Okay, so now coming back to, we can quickly check the stock balance report. In the stock balance report, okay, you'll have to generate this report. It shows that this item 10 quantities available, all right, and we have the
Mm-hmm.
shop now. So we kept that item in the shop,
Mm-hmm.
store. Now
Mm-hmm.
all we have to do is basically wait for the customer to arrive and place an order.
Mm-hmm.
Let's
Mm-hmm.
say customer comes,
Mm-hmm.
and we have to raise the sales order. So in the new sales order, we'll mention who is the
Mm-hmm.
customer. Say Modern Solutions or say Cafe Bliss Interiors is our customer.
Mm-hmm.
To keep it simple, let's
Select the other one.
yeah, let's
Otherwise, it will be.
Modern Office Solutions.
Yeah.
So this is the company to whom we are selling the item.
Mm-hmm.
Okay, they come to our store. They say that okay, they need 10 chairs. So we
Mm-hmm.
select the same item, and we select, say by when we have to give delivery. We have to give delivery on say 26th December.
Mm-hmm.
It is 10. Now we bought
Mm-hmm.
it for 3,000, right? Then let's sell it
Mm-hmm.
for 5,000. Let's make some profit.
Is it cashed or I don't know why it is taking USD. One of the customers is USD, but I don't know which one.
Yeah, this is also USD. So let's. I don't think we can easily change the currency, but I'll.
No, no, one of the customers is INR.
No, no,
I
no. I
don't know.
think both is USD.
Mm-hmm.
Maybe I can change right here.
Okay.
Modern Surface Solutions.
Yeah, yeah, modern is INR. Cool.
Okay, it should have reset by the way. But let's
Mm-hmm.
say that we are selling it for 5,000 per chair, or
Mm-hmm.
we've
Mm-hmm.
bought it for 3,000, right? By the way,
Mm-hmm.
there is this validation in the system. So the cool thing just to show off. Uh,
Mm-hmm.
let's say we are selling it for 25,000. Right?
Mm-hmm.
Can system prevent, prompt that no, no, you are making a loss here?
Mm-hmm.
It didn't, right?
Okay.
Now here there is a new feature called selling in the selling settings. Validate selling price for item against purchase rate and valuation rate. Now if I just check
Okay.
and save it,
Mm-hmm.
okay, let's see what happens. I'll just cancel this, amend it, and I'll try and again let's say sell this item for 2,600 because we know the purchase the item, we bought this item for 3,000, right? I don't know if valuation rate is fetched here, but it is there in the backend. System knows,
Mm-hmm.
right? And
Mm-hmm.
here also we select a source warehouse as Jagdalpur. Source
Mm-hmm.
warehouse must also be selected. I think that was also a reason it didn't validate. Now that
Okay.
we have that validation, we have also mentioned the Jagdalpur as a source warehouse. If I
Mm-hmm.
say it gives me validation that selling rate for the item is lower than the last purchase rate. Selling rate should be at least 3,000 if you don't want to incur the loss. So
Okay.
this way you can actually prevent losses. So here I'll put rate as 5,000. Fair enough.
Yeah.
Also you can apply taxes and whatnot. So in state, out state, I'll simply put in state, save and submit. Again, just like purchase order, sales order is also sort of a contract that okay, I'm
Mm-hmm.
buying this item from you at this
Mm-hmm.
rate. Now
So it
coming,
won't be in account, right? Right now, no accounting
it
entries.
doesn't have
Okay.
any impact on the accounting till yet.
Yep.
So what we'll do is basically now we'll do a next step of transaction, which is exactly opposite of purchase receipt called delivery note.
Okay, we have delivered it. Cool.
And in the delivery note, this thing of basically moving 30,000 will happen because now we are actually dispatching delivery note, right?
Mm-hmm.
As per the perpetual inventory, goods doesn't come into expense right away. As per the periodic, it can come, but as per perpetual, goods will come into expense. It will come
Mm-hmm.
into expense when you
Mm-hmm.
sell it,
Okay.
right? And for the same thing in the delivery note,
Mm-hmm.
in the delivery note also, you will find a field called expense account,
Cost of goods sold.
cost of goods sold.
Nice.
Okay. So here we have delivery note, and of course it will check in the Jagdalpur warehouse. Do you have 10 items? Here
Mm-hmm.
it's showing showing this green indicator means it has the stock. If
Okay.
I just change it to
Yeah, I
say
was wondering what that was.
yeah, if I simply change to stores and save it, this turns to red.
Mm-hmm.
But because you don't have the stock, and here you don't have the stock. If you don't have the stock, you can't proceed. It will simply say that this item, this much quantity is not there in this warehouse at this point of time.
Okay.
Okay, so you'll have to basically select the item. It's pretty simple and obvious. You'll have to select the Jagdalpur as a warehouse, and it turns green once again.
Nice.
We save and then we submit. Okay. Now, if I show you view accounting ledger,
Mm-hmm.
you will see stock in hand, which is on the asset side. So
Mm-hmm.
hence debit got credited means reduced
Mm-hmm.
because your stock is going out. And
So stock in hand was liability. So liability is a credit account. It's going down. So no, it's oh, what am I missing? Liability is a credit account. Credit is being no, so liability is
no, so stock in
decreasing.
hand. Where is stock in hand? Asset or liability?
Asset. Okay, no, asset, right. I make a mistake. But it's an asset. So asset is basically debit. Debit is decreasing means credit. Okay, credit entry. Correct.
Right. And same
Hmm.
way, cost of goods sold. Now, eventually, we are booking an expense. We are saying, yeah, we made an expense of 30,000.
Okay.
So here, what is expense? Debit or credit? Base,
Expense is basically AED, right? So debit. It's
debit.
also debit. Hmm.
So increasing, right? Expense is increasing,
Increasing.
increasing. So
Expense is increasing. So debit. Correct. Debit increase. Cool.
okay,
Hmm.
fair enough.
Yeah.
So now if I go back to balance sheet, and if I
Hmm.
reload, it says in asset it's 30,000. Why 30,000? Sorry,
70,000.
yeah. Why did
Yeah.
30,000?
Yeah, so the 30,000 rupee chair went away.
Yeah. So now finally,
Stock. Hmm.
if we basically like look into profit and loss statement,
Hmm.
we'll see that expense is 30,000.
Okay. Now it is there.
Okay, and profit for this year is minus 30,000 because till now we haven't made income.
Hmm.
We have not made sales invoice.
Okay.
We only received an order, but we haven't made a sales invoice. So what
Hmm.
we'll do, we'll go back to our delivery note. I'll quickly create, just like we made a purchase invoice, and
Hmm.
there is a thing called there's a thing called accrual, right? Always remember.
Hmm.
Now
Hmm.
we are making a sales invoice, wherein
Hmm.
item is there, income account is there. So now
Hmm.
comes the income account. We talked about a direct income account and indirect income account, right?
Hmm.
So here we'll have sale as an
Hmm.
income account.
Hmm.
We'll have sale as an income account because we are booking an income finally.
Hmm.
Right. So, but the payment is not happening right away. We are saying that
Hmm.
there's an accrual. Customer said just like we took time from our supplier, same way customer also said that, oh yeah, I'll pay.
Okay.
So same way here in the balance sheet, if I reload,
Total liability. Okay. Total asset. Why is it like weird numbers? Oh, taxes. Cool.
yeah.
Hmm.
So you have your debtor account because you're supposed to receive 59,000 from your
Customer.
customer. You have not yet received, so you should know, right? It should
Hmm.
reflect your asset.
Hmm.
You are supposed
Hmm.
to receive this much account.
Hmm.
Yeah, you are liable to pay taxes to to the government, right? So if
Hmm.
you'll have this customer making this payment of 9,000 extra, you are actually liable to pay this much to the government. So you
Okay.
have to basically book this separately.
Hmm. Makes sense.
Okay. And if I look on the profit and loss side, even though we are yet to receive the payment, right? But
Hmm.
on the 50,000 as an income has been realized in the sale account. The sale account which we selected here on the item table, we selected sale account, right?
So income is
Income
it
is
is receivable, right? So it's an asset.
income is booked. So as per the accounting standard, the moment you
Mm-hmm.
make a sales invoice,
Mm-hmm.
income is booked.
Okay.
Okay, and the receivable or whatever that you can keep tracking on the balance sheet side.
Okay.
But the moment you or till the time you don't want to make a book and income, you don't make sales invoice. It's as simple as that. And that's why
Okay.
there is something called pro forma invoice. Because generally what customer does is basically they use sales order as a pro forma invoice also,
Mm-hmm.
right? And only when there is a confirmed, invoice or purchase invoice received from the other side, from the customer.
Mm-hmm.
Because in this case, customer will raise the purchase invoice, right?
Mm-hmm.
Customer will first raise a purchase invoice, and then customer then we will raise a sales invoice. And hence there is this field also. I'll just duplicate it. I'll just duplicate, and there is this field also called more info customers purchase order and
Mm-hmm.
purchase order date. Once
Okay.
customer has raised purchase order and purchase invoice, means he is very likely to pay. He's not likely to ditch us. At
Okay.
that point of time, then with that validation, we can make a sales invoice, and we can have our income booked.
Okay.
Okay. So that's how businesses work. Now, eventually, we have purchased item for 30,000, sold it for 50,000. So eventually, there's an income of 20,000, right? Now let's
Mm-hmm.
complete this transaction of sales invoice also, so that this balance sheet, we have this debtor which is keep showing, it can go off, right?
Mm-hmm.
So what we'll do, we'll create a payment entry. So in the
Okay,
payment,
that we received this payment from this particular customer.
yeah, yeah,
Okay.
yeah. And again, in the accounts, it will automatically fetch your HDFC account as a account in which you're receiving payment.
Yeah.
If you want to select ICICI Bank, no worries, you can select ICICI Bank here.
Okay.
Okay, but we'll proceed with HDFC account.
Cool.
59,000 received in our account against this invoice. Check number and date for the reference. So we put that, save and submit. So now whatever we're seeing on the balance sheet, this debtor
Mm-hmm.
will just vanish, because we
Later will vanish, but the bank account balance will increase.
are 50,000 will turn to. So now asset value is same, right?
Mm-hmm.
So here
Yeah, it went from one asset to other.
one asset to another, right?
Mm-hmm.
HDFC balance got increased, and you don't have any liability. So just like
Mm-hmm.
we had account receivable report, same way
Mm-hmm.
you also have accounts just like you had account payable report, same way you also have account receivable report, which shows all the outstanding invoices for which income is booked, but
Mm-hmm.
payment is yet to be received.
Okay.
Okay, so now the last step, right?
Mm-hmm.
So you have 20,000 booked as a profit,
Mm-hmm.
and this is year end, and now we are literally at the year end anyways, right?
Mm-hmm.
So what we have to do is basically there is a term called closing books of accounts. What
Mm-hmm.
closing means, forget everything you did in the year, whatever profit you made or the loss you made,
Mm-hmm.
have to basically shift this profit and loss, and
Mm-hmm.
whatever it has to actually move into balance sheet, and balance sheet should tally after that. If it is not telling, then there's a problem.
Mm-hmm.
Okay, and where should it tally? Where should it tally? I mean, sorry, where should it go? So here, basically, you have 20,000 as a difference of income and expense. In
Mm-hmm.
income and expense, we are saying we are getting 20,000.
Mm-hmm.
Now, this 20,000 should go where? Where should it go? I mean,
Asset.
it should go into asset, into bank account.
Yeah. So we
But bank
can.
already has the balance, right? Bank is already at 1,09,000. If you put more 20,000 here, it
Okay.
will become what, 1,49,000. So 1,49,000 and 1,09,000. It's not
Doesn't
like.
match. Hmm. Okay, what's happening here?
But
So
why?
that
Why?
20,000
I mean, what that profit, like how that profit happened? Who put in the money?
mm, shareholder, the
Shareholder,
capital, right?
right? So eventually, basically, whatever happens is basically whether it is a profit or loss, who bears it? Like who takes it up?
The whoever is the owner or the
owner, right? It's on the
Mhm.
owner, right?
Mhm.
Owner, it's on the owner basically. It's for the company is actually sort of a reserve and a surplus.
Mhm.
That's why on the reserve and surplus is on the liability side because it's on the shareholder. It's actually shareholders' income.
Okay.
It's actually shareholders' income, right? It's up to
Mhm.
them whatever they want to do, they'll do or not do. So that's
Okay.
why this 20,000 will go into reserves and surplus account, which is actually on
Mhm.
the liability side. And
Liability. Okay.
once we shift that, this whole thing will
Mhm.
become zero. Profit and loss will become zero for that particular year, and asset
Mhm.
and liability will tally.
Okay.
Okay,
Makes
so
sense.
there's a feature called period closing voucher. In the period closing voucher, we'll say that we are posting this on 31st for closing this financial year.
Mhm.
Okay, and what is the closing account at?
What is this?
Closing
Closing account hand. So where will the balance go or whatever profit loss go?
20,000 go.
Um, Capital, whatever equity.
Yeah, equity side. So if we just look at the chart of account,
Mhm.
in the chart of account under liabilities, capital account, you have this account,
Reserves and surplus.
right? So in the new pre-closing voucher, all we have to do is basically select this reserves and surplus account,
Mhm.
closing year 2023. Anyways, we are closing and closing
Mhm.
hopefully the session for this day also. But let's hope this books closes. So
Okay.
here what it does is basically, and now if we go back to the balance sheet,
Mhm.
it was 129 and 109. If I just do a refresh,
Okay, it's still that. What happened? Oh, we have to change the fiscal year, right?
no, for some reasons equity is there, but this hasn't reflected. So I'll just quickly scan, refresh. Okay, here it is showing correctly. Asset is here. If you see, your income
Mhm.
and expense has become zero,
Mhm.
and your asset and liability is telling,
Mhm.
right? And in the liability under capital account, you have 20,000 into reserves and surplus account.
Okay.
Okay, so this is the ultimate thing, like seeing the account telling.
Mhm. So does like every company make sure that they
You
tally
have,
at the
you,
end
you
or
have to. I mean, you don't have that choice, but you have to.
change the fiscal year probably? So I think that's an issue. I don't know. I'm
No,
not sure. There is no new fiscal year, so it's showing for the previous year probably.
or maybe because of date, because we made this entry period closing voucher in the future date.
Yeah, mid. Makes sense.
Period closing voucher. If we basically make it on in today's date, I'm pretty sure it will go through.
Okay, cool.
But yeah, since this is not saying based on your it is not saying based on your current date. It is actually showing the correct thing, that asset and liabilities. And once you have this thing, asset and
Mm-hmm.
liability zero, everything and asset and liability is telling, sorry, and
Mm-hmm.
expense is zero, you're done with the year.
Nice. Awesome. So we went through whole complete cycle, right?
Yeah.
Cool. So
So
questions or anything?
I don't know how many people could
Make it till
basically, yeah,
now. We started with 16 people.
yeah,
We still are at 16, so that's a good thing. We went to 13 in between, but
okay,
it's a good thing. I
good.
guess I
So
think the
yeah,
la
I think it's already, I think, overtime. So
yeah, we are over time.
want
So
to
I thought at the latest 8, but yeah, 5 minutes is fine.
have.
Uh, T says I think the last step is to pay corporate income tax. Yeah.
Income tax never ends.
So how was the session? Do give feedback. Maybe we have to plan one more session. So I have asked Dipen also to do an advanced accounting session. Probably when one or two more episodes with Dharmesh uh, are done. So this is like perfect fit episode. I didn't think it would fit this perfectly after the two episodes with this did with Dharmesh. So
Mhm.
last episode we covered the basics of chart of accounts, item and everything, and this is like perfect.
Nice.
Yeah.
Yeah, I hope. I mean, and if you basically just consider the case and do it multiple times with
Hmm.
more complex transactions over the
Hmm.
time, I
Hmm.
think you'll get it. This will just come into your muscle, brain memory, fit in
Hmm.
that
Hmm.
which other two accounts, what is happening, what is increasing, what
Hmm.
is decreasing, and
Hmm.
once you do it multiple times over and over again, it becomes a
Hmm.
muscle memory.
Yeah, yeah, makes sense. This was like very nice. I learned a lot. Like I understood a lot. I maybe knew the facts, but I didn't get like the dots connected today.
Mhm.
So that this is awesome. Probably I am pretty sure this will be one of the most viewed episodes in this series.
Oh, I am
Let's see. Inshallah. Let's see. But yeah, I'm guessing this because it was a good episode, and these basics are anyways required to understand more advanced concepts in ERP next or in general accounting, right?
Yeah, yeah. So just closing that thing that
Mm-hmm.
debit and credit you have to just memorize, mug it up, but in the
Mm-hmm.
end it makes sense. So yeah, it does make sense.
Yeah, in the end. So someone at the conference said, right, like what they do, like may not make sense, but eventually it makes sense.
Yeah, there's a logic behind
Okay.
it. Yeah, but in the beginning you have to just accept it as a fact and move on.
Yeah, yeah. AEDLIC. I will recall now. And then other stuff also, indirect, direct. What are the voucher types? How do they fit in the reports? So very, very nice. What do you say? Crash course, kind of. I should rename this episode to Accounting Crash Course or something. But yeah, thanks, Umair, joining in on Sunday. You were going on leave, so I had to ask you for a Sunday. Otherwise, it will go to next year. But yeah, it's good that we did it. So it will be. I will have at least more context in the next episode with Dharmesh.
Right.
So
I hope. I
cool,
mean,
cool.
I just wanted to be associated with Build with Hussein. They're really great.
Anytime welcome. You want to do episode every week, you are welcome. But yeah, yeah, let's do one more session on accounting sometime next year now.
Maybe. Yeah. Let me
Yeah,
know. I'll be happy. Okay.
sure. Thanks, Umar.
Thanks for everyone for attending. Hope. Oh, yeah.
Yeah, thanks everyone for attending. Happy New Year in advance. Probably I'm going to see you two more times before New Year, but yeah. Cool,
Chalo.
cool. Then I'm just going to studio mode. Goodbye, everyone.